In today's episode, we're going to talk about a few of the reasons why a taxpayer may be selected for an audit. Now, in last episode, we talked about what an IRS audit is, and we clarified just because you're going through an audit does not mean that you did something wrong.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey family, welcome to episode 62 of the Tax Relief with Timalyn Bowens podcast. In today's episode, we're going to talk about a few of the reasons why a taxpayer may be selected for an audit. Now, in last episode, we talked about what an IRS audit is, and we clarified just because you're going through an audit does not mean that you did something wrong. Okay, so I want to reiterate that here today because a lot of people are under the assumption that if they receive correspondence from the IRS at all, it means something was wrong on their return, the preparer did something wrong, something's up with their job, or they go to the extreme of thinking that now they're going to go to jail. Okay, if you're selected for an audit, it does not automatically equal there's a problem or anything was done wrong. The IRS uses several different selection methods. So let's talk about what that looks like. We have the random selection and computer screening, and we also have related examinations. So yes, it is true. You can randomly be selected for an audit. Now, the IRS has a national research program, okay? Within that program, they collect data from tax returns to develop what we would call quote unquote norms for similar returns. So let me give you an example. If you're a business owner, whether you are a sole proprietor, which is a business owner for IRS purposes, remember, or if you have an S Corp or partnership, there is a code that you are required to put on the tax return that lets the IRS know what type of industry you work in, right? So there's one for tax professionals, there's one for CPAs firms, insurance agencies, landscaping and lawn care companies. And what they do with this information is they're able to take everyone in a certain industry and see what normals, what norms there are for that industry when it comes to filing their taxes. So when they have all of this data, they're able to create statistical formulas, which means no, everybody in the industry shouldn't be making the same amount of money, but if they have a certain amount of income, it's more likely that they spent this certain percentage in advertising, this certain percentage in contract labor. You see where I'm going? So although the numbers aren't going to match across the board, some of the ratios are going to match. All right. So when they've created these norms, they are going to compare your tax return against the norms for similar returns. So let's say I have an EA firm. What they're going to do is likely look at my tax return compared to those of CPA firms, other tax professionals that are not credentialed, and when they have my income lined up and they're looking at the expenses and things, there's going to pretty much, again, looking at different percentages, be norms within this industry. These norms, again, are developed because of the research that they've done and from audits of a statistically valid random sample of returns. So not all people in Louisville, Kentucky, not all people in Kentucky, but just random samples. And if my tax return doesn't match up with some of these norms from the random samples, the IRS may select my return for an audit. Now, They're using the computer to screen this, right? Because nobody's hand processing these returns. Thank God I'm e-filing, right? So when this happens, should I be nervous? Not exactly, because again, this is at random. It does not mean that anything wrong has taken place. However, what I do need to know and understand is that they may ask me for information to substantiate certain claims that I've taken. As a taxpayer, the burden of proof for income, certain deductions, or not certain, all deductions and credits is your responsibility to be able to prove. So, I want to make sure that I have my affairs in order. And when I'm working with a tax professional, I'm not claiming income that I didn't make. I'm not claiming deductions for expenses of things that I didn't actually purchase. And I'm not claiming credits that I am not at liberty to take. When that's the situation, for the most part, you don't have anything to worry about because you're simply going to have a conversation with the IRS to validate the expenses and income that are shown on the return. But we'll get a little bit into the process later in the episode. Another way that you may be selected for an audit is when your tax return involves, hang on, let me back up. You may be selected for an audit if things on your return involve issues or transactions with other taxpayers whose returns were selected for audit. So an example of this would be investors, or if we're looking at business partners. So let's say, for example, you all know who my business partner is if you've been listening for a while. If not, she calls herself America's best business partner. Let's say that she is selected for an audit and we both have K1s from the same business. And the IRS sees some things on her K1 that are not in alignment with the norms of the random sample that they have selected. They see some stuff and they said, hey, this looks a little bit like some fuddy-duddy stuff, so we're going to select this for random. Or we're going to select this for an audit. Well, when they look, they say, hey, there are other taxpayers who have been issued K1s from this company. Let's go ahead and pull theirs too, because if we have fuddy-duddy over here, we might have fuddy-duddy over there as well. Okay, so that's what we call a related examination. Okay, now, some people, when they file a tax return, the original tax return, they miss their claim for certain credits and deductions. So they go back to file an amended return to go back and claim those credits, deductions. Maybe they left off income. Amended returns go through a screening process. Okay. It's not necessarily an audit like what people get scared of, but a lot of people miss out on the opportunity to file an amended tax return because of that screening process. They're scared that it's going to trigger an audit if they're going to get a refund from the amended return. That is incorrect. Just like when you file an original return, just make sure that if you're filing an amended return, that you actually have the ability and right to claim the credits and the deductions in question that you're adding to the return. Now, if you want to learn more about amended tax returns, I have done another podcast episode on that. What is an amended tax return? And I actually walk you through the process of how to file an amended tax return for individuals, 1040X, on my YouTube channel. Both of those will be linked down in the notes below. Okay. So those are a few of the ways that you can be selected for an audit, but how do you know? If you are selected for an audit, the IRS will notify you by mail. They won't initiate an audit by telephone. I'm going to say it again. The IRS won't initiate an audit by telephone. The reason I'm saying this over and over again, the IRS will not initiate an audit by telephone, is because there are scammers that have taken advantage of the fear that people have of the IRS, and they will reach out via telephone to say that you're being audited and to get your personal information so that they can scam you. Don't fall victim to the scam. If you are truly being audited by the IRS, you will receive a CP 75 or a CP 75A, which is a notice of request for supporting documentation. When you receive this request for supporting documentation, you want to ensure that you provide the IRS with what they are asking for, nothing more and nothing less. Now, nothing less because you don't want them to come back and dig deeper into your stuff. And you also don't want them to come back and say, hey, you can't take this full deduction because you didn't give us all the information needed. But you also don't want to give them anything more because, again, you don't want to open the door for them to explore other areas of your return. Let me give you an example. Let's say that you purchase business supplies from Walmart, correct? Now, you keep the receipts, but let's be real. You're supposed to be able to get a little bit of everything from Walmart, right? Not just business supplies. So a random receipt from Walmart does not prove that you did anything. You may have gone grocery shopping while you were also buying your business supplies, just bought it all on the same card and transferred money. Here's the problem. First, we've pierced the corporate veil, right? Because you've used your personal card to do so. Now we've opened that up and the IRS can explore that account. But if we give them a Walmart receipt with all your groceries and everything else, that means now you've opened up the door for them to question the validity of your other expenses. So in this situation, because they're asking for information to substantiate the office expenses, you would redact the rest of the information on the receipt that shows the other purchases that you made. You would make sure that the office expenses were still visible, the price of the office expenses was still visible, right? The date, all that information, where you purchased it, and that's what you would provide. And you would have a note there that ticks and ties it back to the expense that you're having to substantiate. Now, in addition to that, you should also have financial statements that are prepared. And this is another reason why having a great bookkeeper is key to winning the game for business owners, because they will have already taken all of this information and pulled out your expenses, etc., so that you have financial statements that you can also provide in addition to the receipts. And you'll be able to go exactly where you need to find the receipts because you have somebody else managing that for you. Okay? Again, this process will not be initiated by phone though. If you are questioning a phone call that you received and you don't have a letter, you can check out your IRS account to see if a notice was sent. Okay, because that will be indicated on the account on your account transcript. Okay, now I kind of talked about what you should give them, not more than they ask for, not less. When you're wondering what you should provide, the IRS will provide you with a written request for the specific documents they want. Okay. Now, on the IRS website, if you're looking under the area for audits, they do have a list of records the IRS may request to give you an idea. Okay. But again, in your situation, they will give you a request for specific documents they want. The IRS accepts some electronic records instead of or in addition to other types of records. Okay. So you want to make sure that if you are assigned to a revenue officer, auditor, an auditor, that you are in constant communication with them. So if you're having trouble finding something, you need a little bit more time, that's communicated. That if you're not sure if this is what they need, that is communicated because they will be the one to help you determine what the IRS can accept. Okay. Now, the law requires you to keep all records you used to prepare your tax return for at least 3 years from the date the tax return was filed. Now, requires is a strong word, right? Because there's nobody sitting there with their hands on their hips making sure that you keep those. But it is your responsibility to keep those for at least 3 years. Now, with that being said, people will ask, well, how far back can the IRS go to audit my return? It must only be 3 years since I only have to keep my documentation that long. That is it depends question, right? So typically they can include returns filed within the last 3 years in an audit. But the same way with penalties, if they identify a substantial error, they can go back even further. Now, they typically don't go back more than the last 6 years, but they can. So, again, when things like PPP and ERC and all that was going crazy and people were just throwing stuff together, it's 2025 now. But if the IRS felt that somebody filed a fraudulent tax return in 2020 to claim the PPP loan, they can still go back and audit that year. Okay. Now, the IRS does try to audit tax returns as soon as possible after they're filed. So most audits will be of returns filed within the last 2 years. But again, if they identify a substantial error, if they suspect fraud, they can go back further than the 3 years. All right. So I know that I've given you a lot of information in this episode. Next episode, I want to talk about how the IRS will conduct the audit and what to do if you don't agree with the audit. All right. And I also want to remind you, if you are in the midst of this, you do have rights as a taxpayer. Okay. I've done a full episode to cover all of the rights. You have a right to professional and courteous treatment by the IRS employees, okay? Don't let them make you feel stupid. You have the right to know what this process is going to be like, the right to be treated like a human being with dignity, and you have the right to know why the IRS is asking for information, how they're going to use it, and what will happen if the information is not provided. You also have the right to representation. Like I said, I know this is a lot, and although this episode is short, I know I've shared a lot of information. If you feel overwhelmed in this process, you have the right to have a CPA, tax attorney, or enrolled agent represent you before the IRS. So they would take care of the communication. They would take care of making sure that the documents you have to substantiate certain claims get to the IRS, right? If you're interested in seeing if you are a good fit for me to represent you in an audit, you can book a call with me at www.bowenstaxsolutions.com, which will be a link down in the show notes below. But I do want to encourage you, even if it's not me, make sure you get the help you need. And if you don't mind doing me a favor, please share this episode. You never know who is facing tax problems that they're not talking about. 1 in 50 people are experiencing a tax issue that's related to the IRS. By sharing this episode, you're helping me fill the tax literacy gap one taxpayer at a time. Thank you. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.